Hi everyone, welcome back to the USCPA classes for Financial Accounting and Reporting Examination. In this video, we are starting account payables and accrued liabilities, right? So this is part 1. Here, I'll be covering in detail about current liabilities, liability arising from exit or disposal activity, non-governmental not-for-profit expense. This is part 1. After this, you can see part 2 as well to finish off the topic at payable and accrued liability. So let's dive into part 1 of payable and accrued liabilities.
Payables and accrued liabilities. So in this 3.7 topic, payable and accrued liability, we'll be covering 5 things. First is like high level, you can say definition and overview. What is payable? What is accrued liability? What are the recognition criteria? What are the accounting treatment for the same? And then requirement of second criteria for certain events and when there is no second critical event required. So we'll be understanding that one by one. So more or less, like in the financial statement, you have seen like payables and accrued liability generally split into current and non-current. So we'll be understanding the classification part also, what will go into the current and what will go into the non-current also. And then we'll be understanding one by one what is current liability, and that we'll be understanding in detail certain definitions which is being included in the current liability or what is to be considered as a current liability. Then we'll be discussing the classification, how to classify the current liability into the you can say financial statement, and how to identify the item which is not a current liability and to be disclosed separately. And then we'll be discussing short-term obligations that are expected to be refinanced. That also we'll be understanding, like refinancing option is also there in certain liabilities. So we need to be very careful how to deal with those refinancing clauses, because that may result into change in classification from current to non-current or non-current to current. So we'll be discussing that, what are those clauses. And the last one, we'll be understanding the prepaid store value product derecognition, like vouchers, loyalty reward points, breakage concept, which we have discussed earlier in ASC 606, if you remember. So we'll be discussing that also again over here, and how that needs to be disclosed under the current liability and what amount specifically we should be disclosing in the current liability. Then we'll be jumping on to the 3.7.2, which is liability arising from exit or disposal. So there are certain contracts in which you may have end up with some exit liability. So how to recognize those exit liability? First, we'll be understanding the definition. What is exit liability? What is disposal activity? Right. Then we'll be understanding how to recognize and measure one-time termination benefit or expected for one-time termination benefits, or maybe like retirement obligation, contract of termination, or asset retirement obligation. So, in terms of, you can say, long-term employee benefits, right? So there are certain obligations that employer do have once they retire. So that we'll be understanding. And then, there are certain contract, for example, long-term lease contract. And if you are breaking that lease in between, then for the lock-in period, you need to pay the obligation, right? Those kind of concept we'll be understanding in the contract termination clause. Or and then asset retirement obligation also you might have studied, like in especially I'm sure you might have heard, like in the oil and gas industry, when there is like extraction of the oil. So after the extraction of the oil, it's mandatory as per the law, you need to put the rig on that well from where you have extracted the oil. So that's also like asset retirement obligation. That means after all extraction of the oil, it's being a responsibility of the company to restore the bed of the seabed, basically, right? Next one is the cost and expenses. So what are the costs, basically, or you can say expenses to be recognized into the income statement? And this is not like specifically to the COGS, but to the other expenses. Generally, like current liabilities comes from the other expenses. Basically, it's a counter, you can say, account of the other current liability. Like you need to debit certain expense and credits the liability basically. So the expenses which you are debiting, so it's more about like either it may be a cost or it may be an expenses. So you'll be understanding what are the consumption of benefit, loss of lack of benefit, imputed interest on receivable and payable. So those kind of concept will be understanding and understanding the journal entry for the same as well. And then lastly, we'll be discussing, probably tomorrow, we'll be discussing the non-governmental not-for-profit expenses. So this, like is being very much aligned with the last chapter, which is state and central government, right? So whatever we'll be studying over here, whatever we'll be understanding in the 3.7.4, it will be applicable in the last chapter also. So we'll be discussing in the non-governmental not-for-profit expenses about the program service expenses. What is program and what are the program service expenses? How, like those expenses are being incurred, carried out, or maybe recognized in the financial statement. And then second concept we'll be understanding is the supporting service expenses. So one is your primary expenses, that is toward the specific mission which you are carrying out for the respective not-for-profit organization. Then second is like supporting expenses to run and maintain the respective organization, or to run, maintain, and manage, and for the raising of the fund for the respective not-for-profit organization. So what all expenses will be there and how to recognize them into the financial statement, including the liabilities which we need to incur. Then after, we'll be discussing the joint cost for not-for-profit organization, basically incurred for the, you can say, primary mission of the organization, or maybe for the secondary support systems, right? So there will be certain joint costs which are not required to be considered as a fundraising activity. So when you do like fundraising activity, in that you need to identify the specific and dedicated cost which you have incurred only and only for the fundraising activity. But there are certain time when you are doing fundraising activity, parallelly you do other activities also, and there would be some joint cost which is like common area cost, common employee cost, or maybe common marketing cost for maybe fundraising activity and other activities. So how to identify those activity and how to bifurcate those activity among the fundraising activity and non-fundraising activity, that will be understanding. Uh, uh, Joint cost not considered as a fundraising activity if following conditions exist. Maybe we'll be understanding more in detail, but high level, let's understand when one or more of the purpose of the activity is to accomplish some program function or management and general responsibility. So when that activity for which you have incurred a cost not directly relating to the funding, but it may be like general cost, administration cost, or maybe for any other activity, then that cost you need to bifurcate from the funding activity. Second is the audience for the activity was chosen based on some criteria other than the ability to make contribution, right? For example, like in let's assume you have a church, right? And in the church they are doing like fundraising activity. So in the fundraising activity, they have invited all of you, for example, for any donation drive or fundraising activity. In that, like in the church auditorium, they might be doing certain activity, maybe like dance, drama, theater, or something, and where they have invited all the church member as well as the donor. So there may be a possibility like the audience would be journal, right? So everyone who come to the church, they have invited, and then they requested them to donate based on best of their contribution they wants to make, right? In that case of scenario, the audience for the activity was chosen based on some criteria other than ability to make the contribution. So here you are inviting general public, right? You are not inviting specific people to do the contribution. In that case of scenario, you need to identify the joint cost and need to segregate that. Last one is the content of the activity motivates the audience to take specific action other than making contribution, and these actions support the program goal or fulfillment of the management and general responsibility of the organization. So for example, there is an annual day of the trust, right? Annual day of the church. Now in the auditorium they are celebrating the annual day, and then they'll be talking like good things about like humanity, people, God, so on and so forth, right? And then parallelly people are also doing the donation. So in that case of scenario, the main activity is not donation, main activity is not fundraising, right? Hence the expenses which the not-for-profit organization has incurred should not go for a dedicatedly for the fundraising activity. So there is a some piece of it may go for a fundraising activity which is a specific and dedicated cost for the fundraising activity, but others should go in the general and administration expenses. So that we'll be understanding in detail, but high level, this is what we are planning to cover today and in the first half of tomorrow. Today we'll be targeting to finish payable and accruals liability, which include like definition, overview, recognition criteria, accounting treatment, and then requirement of second criteria or not second critical event required. Then we'll be discussing current liability and liability arising from exit and disposal activity. If time allow, we will cover the cost and expense also, but non-governmental not-for-profit expense will be covering tomorrow morning, right? So direct costs of specific fundraising event are permitted to be reported as a direct dedication to the special event revenue. So that's very much implied. Okay, now coming to the main topics, payable and accrued liabilities. So first we'll be understanding definition and overview. Liability, as you all know, what is liability? The probable future sacrifice of economic benefit arising from present obligation to transfer the assets or to provide the services to other entities in future as a result of the past transaction or events. So very simple, we are studying this from 11th standard, so nothing new. Second important thing is the recognition criteria. What is the recognition criteria for a liability? Let's understand that. Liability arising or recognized when some critical event in past occur from which the benefit have been received. That means you have already received certain benefit, so now there is an obligation to pay for the same. The obligation which you have not paid would come into your liability, would be recognized as your liability. Second example over here is a product warranty. Note over here is a second criteria event may be necessary in some of the cases for liability to recognize. So there are certain liability which is very much straightforward, like we were discussing. You have already availed the benefit and now you need to pay for the same, but you have not paid yet. So hence it has to be recorded as a liability into your books of account. Second category of liability in which if you see the criteria event may be necessary, second criteria event may be necessary in some case for the liability to be recognized. For example, warranty, right? So if you see what is warranty, for example, when you purchase a car, you get the warranty as well. Yes or no?
Yes, sir.
So from the company standpoint of view, let's assume you are a General Motors or maybe Hyundai or maybe Tata Motors, right? In that case of scenario, when you have sold the car, at that point of time, do you have any liability to incur?
No, sir.
No, but still you make certain provision for the warranty, right? Based on the historical data, based on the historical claims, right? And future change in price, that also you consider the inflation impact. But when the actual liability arises, when there is a breakdown in the car, right?
Yes, sir.
So first critical event is the issuance of product warranty at the time of sale, and second critical event is product proving to be defective, when you get any breakdown in the car. So in that case of scenario, how you need to do the accounting, let's understand that. First is current status of second critical event. So first event is very much clear, you sold the car, right?
Yes.
When you sold the car, what will be the journal entry you will be making?
Car debit to bank. Oh, sorry, sold. Sorry, bank debit to say car.
No, no, no.
AR debit to inventory.
सर कार को भी तो डेबिट करेंगे.
कार
हाँ, सेल ऑफ कार ही तो हो गया ना.
अच्छा, कार को ही तो सेल करना है.
नहीं, तो सेल हो गया. What is the other entry?
बैंक डेबिट टू कार बोला था मैंने.
हाँ,
डेबिट टू बैंक बोला.
अच्छा ठीक है. हाँ जी.
हाँ, what other entry?
AR to sale of car.
Today's test of journal entry. When you are selling a car, what all journal entries you will be making? First is account receivable to sale.
बैंक डेबिट टू AR.
अच्छा, एक वारंटी का प्रोविजन भी बनाया ना.
वो तो चल पूछा नहीं अभी, मतलब लेता है.
Bank to AR. Okay.
हाँ.
What else?
बैंक टू AR. उसके बाद आपको प्रोविजन का अगर बनाना है तो वो एंट्री होगी, उसकी वारंटी का प्रोविजन बनाना है तो.
क्या एंट्री होगी?
तो प्रोविजन तो क्रेडिट होगा.
वारंटी डेबिट, वारंटी एक्सपेंस डेबिट टू प्रोविजन फॉर वारंटी एक्सपेंस.
Let's assume. Any other entry?
जब सर ये वारंटी अगर मतलब एक्चुअल में होता है कि वो डैमेज होती है एंड वी हैव टू
बात की है.
पे द वारंटी, तो वही होगा उस पे तो.
Any other journal entry?
एट द टाइम ऑफ
AR
सेल तो सर यही होगा बस. AR टू सेल.
AR to sale of car.
यही होगा.
यही होंगी एंट्री तो.
No, you both are accountant.
हाँ सर अकाउंटेंट है तो सही. कई टैक्स रहे बड़े. कमजोर हो गई है अकाउंट धीरे धीरे.
अच्छा, कॉग्स भी तो रिकॉग्नाइज करेंगे.
Who will book this entry?
कॉग्स डेबिट टू इन्वेंटरी रेस. यस.
अच्छा मेरे को बट ये पता बताया ही नहीं सर आपने कि ये स्टॉक ही बेच रहे हो आप. कार स्टॉक है आपका.
From where do you sell the
सुना नहीं
car?
वो कार मैन्युफैक्चरर है सच में. मैंने इसलिए बोला, जान पूछ के थोड़ी बोल रहा हूँ.
No, I told you like you are a company like
अच्छा.
Hyundai, Tata, General Motors. So
मेरे
from
को
where you will sell the car?
मेरे को सिर्फ वो समझ आया सेल ऑफ कार हो रही है तो मैं उसकी एंट्री. चलो ठीक है,
डेबिट टू
ये भी
इन्वेंटरी
एंट्री होगी. करेक्ट. कॉस्ट ऑफ गुड्स सोल्ड टू
Right. So what is the profit now?
60,000. 1 लाख माइनस 40 हो गया.
40,000 प्रॉफिट है सर.
40,000 प्रॉफिट हो गया.
This is your sales.
यस
This is your costs.
करेक्ट.
This is your expense.
बट सर ये रियलाइज्ड मतलब ये खर्चा तो तब होगा ना, मतलब रिकॉर्ड तो कर लिया मैंने बट इसके अगेंस्ट प्रोविजन खड़ा है.
तो हिट
But what is your P&L?
हाँ पीएनएल तो हिट कर गया. करेक्ट. और अगर सर इन केस वारंटी
What all journal entries will be reflecting in your profit and loss account?
हाँ
हाँ ये तो आएगी सारी. ये आएगी सेल ऑफ कार आएगी
और
कॉग्स वो मतलब ट्रेडिंग अकाउंट होता था पहले उसमें आ जाएगी.
So what will be debit in your income statement and what will be the credit in your income statement?
62,000 debit and 1 lakh credit. Correct.
So what is the profit?
38,000.
38,000. Okay. Now come back here. So current status of second critical event. Second critical event means when actual damage will happen, right?
Correct.
So, and current status of the amount and accounting treatment. What all accounting treatment you need to do? So first thing is you do not know, not necessarily the first critical event was determined. So maybe the scenario of salary payable, wages payable. So there is no second critical event required at all, right? For salary payable, you know, like employee have worked and you need to pay on, let's say, 7th of the next month, right? For that, you need to book the liability. In that case of scenario, you know or estimate the amount should be at least estimatable if second critical event is not necessary. So in that case of scenario, you do a recording as a liability at the known or estimated amount, right? Right?
Yes, sir.
When second critical event is not required and there's a clarity like this much amount is being payable. So you'll be recording the liability for the same. Now, when the second event occurred, that means warranty has claimed. Now you know how much expense, right? So in that case of scenario also, you need to record the liability at known amount, right? Third is occurred, for example, litigation claim or assessment. But the amount is unknown. That means somebody has claimed for a warranty. But as of now, the amount is not known for the same. But you can do the best estimation. So then record based on the best estimated amount. Last one is probable future occurrence. That means in future, there may be a probability that certain losses or certain expenses you need to incur. For example, for any litigation claim or assessment. But the amount is not estimatable. So as of now, you are not in a position to estimate the amount. Then record the liability at the estimated amount.
सर वो सही लिखा है,
No.
वो उसने लिखा है अननोन बट एस्टिमेबल, मतलब
हाँ,
पता
but estimable. Yes.
एस्टिमेट हो सकती है, तो उसी पे
हाँ.
रिकॉर्ड कर दिया.
So then you will be recording at the estimated amount. Right? Occurs?
Yes, sir. Yes, sir.
Okay. So these all things you need to keep in mind. Next is current liability. Current liability is obligation whose liquidation is expected to require the use of current assets or creation of other current liability within 1 year or operating cycle of business. What is operating cycle of business?
Operating cycle of business is from the time
The goods are sold to
and then cash is realized
Yes.
again.
Yes, very true. So generally, the operating cycle is considered as 12 months, but for few companies, it may be possible that operating cycle may be more than 12 months. Right? In that case of scenario, the current liability, you will be considering those liability which is being payable within the operating cycle.
Yes.
Which are payable after the operating cycle should be considered into the non-current liability.
सर जनरली वाइन इंडस्ट्रीज में होता है ये, मेरे ख्याल से उनकी
हाँ.
ऑपरेटिंग साइकिल बड़ी होती है थोड़ी.
Yes, wine industry or maybe sometime real estate also.
रियल एस्टेट एज वेल.
Sir, operating cycle is when goods are sold से start होता है या फिर जब goods are purchased
Procured.
हाँ?
Procured.
Procured ना, right? Procured से start होता है
Procurement to collection.
Till collection.
till collection, right? ठीक है.
So that's the reason, you know, like I say, it's apply in real estate also.
Right.
Example would be advance received for obligation due in 1 year or in operating cycle. So these are example: accrual for the wages, salary, commission, rental, taxes, and other liability whose regular and ordinary. Liquidation is expected to be occur within 1 year or less likely. Like for example, dividend pay also, the liquidation is expected within 1 year or less, like like dividend payable, warranty payable, interest payable, etc. Cool. So now coming on to the classification part. So classification of liability. Obligations that are due on demand will be due on demand within 1 year or operating cycle is classified as a current liability. And current liability may also include long-term obligations that are or will be capable by a creditor because the debtor has violated the covenant of the debt agreement. You know, like, have you heard about this term called debt covenant?
सुना तो है सर, याद नहीं आ रहा। Covenant, हाँ मैंने नहीं सुना।
Akash?
No, sir.
याद तो नहीं आ रहा कि
So,
मतलब।
have you taken any loan by any chance?
हाँ सर,
Yes.
लिया हुआ है लोन तो।
So, when company take loan, so they sign certain covenant. That means they have to, for example, if it is an unsecured loan is generally on your receivable inventory, based on that. So they give certain commitment to the bank that this is the working capital they will be managing. This is a stock turnover ratio they will be managing. This is debt to equity ratio they will be managing. This is current ratio, liquidity ratio they will be maintaining. And based on those certain criteria, bank give them unsecured loan, right? And now the company has pile up inventory. They are not able to sell. So their working capital management is completely disturbed. And their current ratio as well as liquidity ratio and debt to equity ratio has been changed, which is not in line with the commitment they have given to the bank. So those covenants are called debt covenant, in which there are certain parameters that company need to manage and maintain. So if at any point of time that company is failed to maintain those debt covenant, then those debt are being due immediately. So for example, you have taken a 5-year loan from the bank. Let's assume you have taken 100,000 loan at the rate of 5% interest from Bank of America. And let's assume every year you are paying 20,000 as an installment and interest on the same. After 2 years, but in that loan agreement, they said you have to maintain a current ratio in a 1:2, and you have maintained to do liquidity ratio 1:1.5, or you need to maintain debt to equity ratio 2:3. But for any reason, your liquidity ratio or current ratio has changed and is not in line with the expectation agreement which you have given to the bank. So that means you are in default of that covenant, right? And when you are in default of the covenant, then bank can ask you to pay immediately
Entire amount, entire loan amount.
entire remaining balance, right? So the remaining balance would be considered as the current liability because bank can demand you any day and you have to pay for it, right? So it will be shift from non-current to current liability. Make sense?
Yes, sir.
So current liability may also include long-term obligation that are or will be capable by the creditor, because the debtor has violated a covenant of the debt agreement. So creditor has a right to receive in case of debtor make any default in the covenant of debt agreement. Next is short-term obligation expected to be current liability or non-current liability. Short-term obligations expected to be refinanced. So that is the point. So what is refinance? Any idea what is refinance?
Refinance is when what I can recall is when you have to pay a low interest amount and principal amount back to the bank, but you take again a loan against it to repay that. I think that is refinance.
No.
नहीं
Akash, any guess?
नहीं, आकर्ष ने गेस करा ये तो।
Huh?
ये आकर्ष ने गेस करा था।
Ayush, any guess?
रीफाइनेंस पता नहीं, ये मुझे पता नहीं, ऐसा लग रहा है जो हमने उसमें पढ़ा था ना, सेल एंड लीज बैक, उसकी तरह ही
Hmm.
कुछ होगा ये।
What all loans you have currently?
मेरे हाउसिंग लोन है एक जैसे,
From which bank?
HDFC।
And can you transfer that to ICICI
Yes,
I
yes.
can,
if there is some lower rate of interest they are offering?
yes।
Right? That can also be refinancing, right?
नहीं, ऐसा
So,
नहीं, जैसे मैंने ट्रांसफर कर दिया लोन
hmm,
ICICI को,
hmm,
तो जो HDFC है उससे मेरा मेरा उसकी तरफ ऑब्लिगेशन तो खत्म हो गया ना,
hmm.
वो तो खत्म हो गया, क्लियर हो गया। अब मेरे पास जो मेरा लोन चल रहा है एक तरह से दूसरे बैंक में
For
चल रहा
example, if you are taking currently you have a loan, housing loan at 9% interest from HDFC, and let's
है।
say ICI come and offer you that I'll give you the same amount at 8.5,
ओके।
right? So you are ready to refinance. That means the ICI will pay to the HDFC, and then loan will be due in the ICI, and in future will be liable to pay to the ICI, not to the HDFC.
यस।
Right? Same way, there are a lot of different category of refinancing. So refinancing of short-term liability or maybe of long-term liability, right? For example, you have taken a short-term loan for 6 months from bank for any, let's say, working capital loan you have taken, but you are planning to refinance that with the long term. So then that working capital loan you need to disclose in the current liability or in long-term liability. That is the thing. Or you have taken a long-term loan, but you are planning to repay within next few months, right? For example, you have taken a home loan for 15 years, right? But next month you got a jackpot and you are expecting a jackpot. And then in the following month, you would love to repay all your loan and would love to be a debt-free life,
Yes, sir.
right? So that kind of scenario could be possible.
यस।
So look at left-hand side, the current liability. Refinance with the short-term obligation, or entity has neither intent nor ability to refinance on a long-term basis. So the short-term obligation which you are expecting to be refinanced would be classified as a current liability. If you are planning to refinance them for a short-term period, or neither you have intent nor you have ability to refinance that for a long-term prospect.
Sir,
So
ये
then it will continue to be defined in the current liability. Second side, when you have intent to refinance on a long-term basis and demonstrate the ability to consummate the refinance. For example, you have a working capital loan of $100,000, right? That you are planning to refinance to the long-term basis. Currently, working capital loan are generally expensive, right? For example, currently you have 7% working capital loan, and parallelly you are in talking terms with the other bank to take a long-term loan. So you got a 5-year loan approval for, let's say, 4% for $100,000. So you'll be refinancing that working capital loan to the, or you'll be transferring that working capital loan to the long-term loan. So here you have intent and you have ability to consummate the refinance for a long-term basis. In that case of scenario, the liability need to be classified into the long-term liability, not in short-term liability. Make sense?
yes, sir.
Hmm?
Sir, so
Now,
basically, refinance means change in terms of loan.
yes,
Right?
तो ये
yes.
रीफाइनेंस ये भी हो जाएगा ना कि अगर मेरा HDFC का मैंने कोई लोन ले रखा है, अब मेरा वो लोन इनिशियली मैंने लिया था 25 years के लिए, ठीक है, लेकिन उसके बाद में लगा कि नाउ आई कैन पे इट इजीली, तो मैंने उसको 15 या 10 साल का करा दिया, वो भी क्या रीफाइनेंसिंग में ही आएगा?
Yes, yes, but that will be long-term to long-term only.
हाँ वो ठीक है, बट
So
हाँ
here
वो
we are
सब
discussing change in
आएगा।
classification basically.
हाँ, अच्छा नहीं, इसमें जो नॉन करेंट लाइबिलिटी वाला हम पढ़ रहे हैं, जो सेकंड पार्ट है, इंटेंट टू रीफाइनेंस ऑन अ लॉन्ग टर्म बेसिस, तो मतलब इसका क्या है कि मैं ऑलरेडी
current
पहले
to
शॉर्ट
non-current, current to non-current. If you
करंट,
see heading is classification,
हाँ जी,
so you'll
ओके
be understanding like change in classification.
ओके।
ओके, और ये कौन से पॉइंट ऑफ टाइम पे वी चेंज इट इन द बुक्स, व्हेन वी आर प्लानिंग और व्हेन वी हैव एक्चुअली एग्जीक्यूटेड द रीफाइनेंसिंग?
When you have intent and ability to work.
ओके,
Very good question.
सर
Ability,
इंटेंट रिकॉर्ड ही नहीं कर सकते कभी? इंटेंट है मेरे अंदर, बट मैं उसको कैसे रिकॉर्ड करूंगा उसके बेसिस पे?
that's management representation.
हाँ, मतलब हाँ, बट बुक्स में मैं कहीं लिख भी नहीं सकता।
No,
मुझे
no, that will like when you do board of director meeting, so they will discuss like this is what we are planning, and it's being recorded in the minutes of the meeting.
राइट, ओके।
So there you identify like what is the intent of management.
ठीक है।
I know it's difficult, but there are ways. Being an auditor, we need to find the ways.
वही तो सर, मैं कहा ये थोड़ा, चलो ठीक है।
Ability to consummate the refinance may be demonstrated either of the following two ways. First is by actual insurance of the long-term obligation or equity security to refinance the short-term obligation after the balance sheet date but before the signing date. Second is by entering into a financing agreement before the balance sheet issue date. Agreement does not expire within 1 year or operating cycle. Company has not violated any provision of the agreement prior to the issuance of balance sheet date. Issuance of balance sheet date, and lender is expected to be financially capable to deal with it. Right. Next is prepaid stored value product derecognized. This is similar to the breakage concept. If you remember, we did in ASC 606. You remember what is breakage concept? We studied in ASC 606.
हाँ सर, उस टाइम पे कुछ क्रेडिट कार्ड का डिस्कशन करा था।
Yes, loyalty reward points, payback points, or discount vouchers, Domino's discount vouchers, those all things. Do you remember? Like what was the discussion we had?
नो सर, ये याद नहीं है बिल्कुल भी। उस टाइम पे ही समझा था और दिमाग से निकल गया बिल्कुल, याद तो नहीं है।
Okay. So let's so here I have added an illustration for the explanation of the same concept again. For example, of like gift card company or discount voucher company or a loyalty reward company. So let's assume you have issued the reward. For example, you have debit card or credit card.
Yes
sir.
So what kind of points you receive? You receive miles, loyalty points, payback point. What exactly you receive?
Sir, each spend pay, I receive some points which can be redeemed into cash.
What we call to those points? Reward points?
Reward points.
So every 100 rupees, you might be receiving 1 rupees.
Yes, sir.
Right? Generally, that's what like market standard is. Right? So, for example, now look at from the bank perspective. Right? Let's assume you are a Bank of America and you have this reward point schemes that every $100 spent, you give $1 as a reward point. So during the year, you have 1,000 of your customer and they have done million of transaction. And those million of transaction has resulted into reward points which you have issued during the year is 100,000. Right? And those reward points, let's assume, has a life of 6 months. Right? And during the year, so this scheme you have started on 1st January, let's say 2023, 2022. And let's assume at December 2022, you have issued 100,000 points. Out of which, like from Jan to December, so 10,000 points have been redeemed by the various people.
Okay.
And the life we were discussing is the 6 month. So there may be certain points which you have issued in January, February, March, April, May. So that has got expired. People has not utilized it. Let's assume 20,000 points have expired during the year. So on the balance sheet date, how much points is open, which is neither redeemed nor expired, is 70,000.
Right.
Right? Out of the 70,000, you are expecting that people will redeem 20,000 and 50,000 will expire.
Correct.
Right? So in this case of scenario, how much revenue you will be recognizing during the year and how much liability you should be recognizing. So here, if you see, what is the life of the points?
6 months.
6 months.
6 months. So that means less than 12 months.
Yes, sir.
Right? So all the liability you will be creating, you are very much clear it will go into the
Current liability. Yes.
current liability, right? So now, if you do the math over here, revenue for the year is $10,000, which is being redeemed, $20,000, which is being expired during the year, and $50,000, which you are expecting to be expired in future. So $80,000 will go into the revenue, and 20,000 would go into the current liability. Make sense?
ये सर 50,000 था, एक बार ऊपर करोगे थोड़ा सा. 2010 क्या क्या था? 20 था redeemed during the year और 10 था
नहीं, 10 था redeemed
नहीं
during the
सॉरी
year.
20 था estimated redemption. ये मतलब मैं ये कंफ्यूज हूँ कि जो हम रेवेन्यू रिकॉग्नाइज कर रहे हैं 50,000 क्लियर है क्योंकि वो एक्सपायर हो जाएगा की वजह से.
20,000 ऑलरेडी एक्सपायर हो चुका है
और 20,000 ऑलरेडी एक्सपायर हो गया तो 70. ये जो 10,000 है ये तो रिडीम हुआ ना. ये रिडीम हुआ तो इसको रेवेन्यू में मानूंगा मैं.
हाँ, so that's a very good point. For example, you are a Bank of America, right? And there is a company called Payback, right?
Okay.
Or maybe a loyalty reward company.
हाँ.
So now we are doing accounting of the loyalty reward company or a payback company. So they will get the money on the redemption and expiry.
अच्छा.
So from their point of view, it will be recognized as a revenue.
We are not discussing this from the bank point of view example, na?
No, bank generally do not manage. They give to the third party.
Okay.
Okay.
Right. Issuer of prepaid store value product derecognize the liability proportionate to the earning as redemption occur or when redemption is removed if user are not entitled to breakage. Breakage note over here, breakage must be reassessed at each reporting period. This $50,000, right, is coming based on your best estimation of the expiry, right? So this need to be reassessed every year. Change is estimated of breakage is considered an accounting for change in estimate. What is accounting for change in estimate? Prospective impact or retrospective impact?
Prospective.
Right? So change in accounting estimate always have prospective impact. So you are not required to change any previous year financial statement. Last
Sir,
one is this.
1 second. Sorry. Sir, ये जो liability at year end 20,000 है, this is expected to be redeemed in 1 year.
Yes,
right?
next 6 months.
हमें एग्जाम्पल वो जो कंपनी थी जो बैंक which manages these points for bank, for these 20,000 it will also receive money from bank.
Yeah, but as of now it will be in the escrow account.
तो वो अभी तो उसको मिलेगा तब तो ठीक है, बट उसके लिए तो लायबिलिटी है कि
अच्छा,
उसको
वो
अपनी जेब से
फ्यूचर
देना है.
एसेट रिकॉर्ड नहीं कर सकते, सो वी वोंट बी रिकॉर्ड.
उसको तो अपनी जेब से देना है एक बार के लिए, फर्स्ट
Okay,
टाइम. तो वी आर रिकॉर्डिंग इट. तो जब सर रिसीव हो जाता होगा मेरे को तो वी विल बी रिकॉर्डिंग इट एज
Revenue
रिसीट.
Yes.
हो जाएगा.
ठीक है सर, sorry to interrupt.
No, that's always good to clarify.
Yes, sir.
Disclosure of methodology and use of significant judgment need to be disclosed, right? So now one quick question over here. On December 31st, 2001, Largo Inc. had $750,000 note payable outstanding due on July 31st, 2001. Largo borrowed the money to finance construction of a new plant, and Largo planned to refinance the note by issuing a long-term bond. Because Largo temporarily had excess cash, it prepaid $250,000 of note in January 2002. In February 2002, Largo completed a 1.5 million bond offering. Largo will use the bond offering proceed to repay the note payable at its maturity and pay construction costs during 2002. In March 3rd, 2002, Largo issued its 2001 financial statement. What amount of note payable should Largo include in the current liability in December balance sheet? So, all of the question is how much Largo need to be disclosed in the current liability. What do you need to disclose in the current liability which you are expecting to be paid in next 12 months,
Yes,
right?
yes.
So here the total note payable you are having $750,000, right? Out of which they are saying you are having cash and you have paid $250,000 in January itself, right? And for remaining $500,000 you have done the refinance. And how you have done the refinance? From the long-term bonds, right? So what need to be disclosed in current and what need to be disclosed in non-current? 250,000 will be current and 500,000 will be non-current,
Right, right.
Yes.
right, Akash?
Yes.
Yes, sir. Sir, 500,000 plus जो additional.
New, yes. But
ये तो
additional will come in next year.
इस साल
In
का
my
है ना?
current year, my
पर
note
yes,
payable are $750,000. So they are
Right.
saying to the December balance sheet, out of this 750, what will go in current and what will go in non-current?
हाँ, right,
भाई और
right, right.
और
वो February. Okay, okay.
वो तो उसके
Hmm?
बाद
Hmm. Okay, sir.
ठीक है. So maybe shall we take 10-15 minute break?
हाँ सर ले
Yes,
लेते
sir.
हैं
And
उसके बाद
it's 11:30, maybe 11:50.
Yes,
Done,
sir.
done.
Done.
ठीक है. Let's come back at 11:50.
ओके